Hello and welcome to an all-new episode of the Transfix Take Podcast, where we are performance-driven. It's the week of March 8th, and we are bringing you news, insights, and trends for shippers and carriers from our market expert, none other than Justin Mays. Mays, welcome to spring.
Hey Jenny, glad to be back with you this week as well as we start to shift gears into the springtime. Now I can't speak for everyone because I know those out west and those in the Midwest are still experiencing some winter weather, but down here in Atlanta, it is gorgeous out. I hope that you're having some good weather up in New York City as well.
Mays, it is always hit or miss here in New York City. Today is very cold. Yesterday was spring-like, and tomorrow's probably going to be summer. But that said, why don't you give us a bit of a recap from last week?
Last week we saw rates remain relatively flat with a slim increase, but this is still higher than the lows we saw throughout the month of February. Rejections, in fact, are still seeing slight slim gains week over week, mainly caused by rejections jumping out on the West Coast due to the weather that was experienced throughout the last 2 weeks.
That's right, and some of that weather even moved up to the southeast.
The southeast is also a little bit higher than we saw most of February, and the Midwest is the flip side, where we're continuing to see a slow decrease in tender rejections. Overall, the national tender rejection is just over 3.5%, a very slim climb from last week.
Okay, and where do we land in terms of rates, Mays?
We are almost identical to where we were last week when we recorded this. We're at $1.70 a mile line haul.
Okay, not much of a jump. It looks like we're remaining the same across the board, but is that the same for fuel?
As you're seeing it at the pumps, and everyone is witnessing at the pumps, fuel continues to decline. We actually started the month at a national average of $4.54, and we have come down to $4.27 as of today.
Now that's really great news for carriers, and I'm actually expecting fuel rates to go down just a bit more, especially as we head into the warmer months, as we're following the same lead from Europe. But you know what time it is. It is time for our regional breakdown, Mays.
Let's do it, Jenny. Let's jump right into the regional breakdown. And this week, we're going to start with the Northeast. The Northeast continues to see slight softness week over week as we projected, especially as we move farther into the springtime. Now, the markets to watch out for shippers is Syracuse and Buffalo, as these markets are becoming looser faster than the larger markets in the Northeast, such as Harrisburg and Elizabeth, New Jersey. Now, there are no signs that capacity is going to get tighter in the Northeast, especially with imports still lagging where we anticipated them being, which we'll touch on later. And to be quite honest, Jenny, for the foreseeable future, we're going to continue to see the same trend we saw over the past week. Rates are going to continue to slide their way down as the weather becomes more favorable.
That's right, Mays. And I think what we're starting to see now is not necessarily a normalization, but what we talk about often both in Transfix and with our cohorts across the industry is that these cycles that used to come so frequently in 2020, 2021, and even 2022 are now starting to level out and take longer, which frankly, depending on which side of the shift you're on, could be a bit of relief, comparatively speaking.
Now, freight going into the Southeast, coastal region, and South are going to become the most favorable to carriers, while the Midwest becomes a little less unfavorable, and let's call out the West Coast again, where carriers are just staying away as rates continue to be extremely low leaving.
Okay, now let's jump on over to the Midwest.
We anticipated a larger drop through the last week, but winter weather continues to make it a more stubborn region right now. But as long as the weather continues to move in a favorable direction, then we are going to start seeing tender rejections decrease and rates decrease. The Midwest will see the largest declines through the month of March as it comes out of its seasonal strong suit. Now, freight going to the Southeast and South will become the most favorable freight, just like the Northeast. And again, the West Coast is going to be an area where carriers try their best to stay away from until volume picks up.
All right, well, let's head on over to the East Coast then, Mays.
Let's talk about the coastal region. The Charlotte market experienced a noticeable loosening over the past week. And to be honest, Jenny, the entire coastal region will continue to see that slim decrease, especially for freight going farther down south into the southeastern states like Florida and Georgia. Now, jumping down to the southeast, we are seeing tightening continue. Severe weather has continued to plague states such as Tennessee, like the Memphis market, and Mississippi and parts of Alabama. But down South Florida, the Miami market, we are still seeing tightening week over week as, like I said, we are heading into produce season. As Southeast as a whole, we actually saw rates increase mildly over the last week. But again, this is not for freight going back to the West Coast. The Southeast is still not hot enough to make freight heading to the West Coast favorable for carriers.
Well, let's talk about the other side, the West Coast.
We actually stopped seeing rates decline in the past week. Now, like I alluded to earlier, this is heavily due to weather. Weather has plagued almost the entire West Coast from the Pacific Northwest down to Southern California over to Colorado and Utah. Weather is actually continuing this week, but we should start seeing some relief in capacity. But I do not anticipate rates to decline much through the next week. But after this week, I do believe we're going to start seeing rates decline back to where they were 2 weeks ago. But like I called out last week, we were approaching the bottoming of the market out west.
That's right. And I do often wonder when that's going to happen over on the East Coast. But why don't we close this out with the South side?
The South also is experiencing severe storms in that same Mississippi River Valley, along with parts of Oklahoma. Now, similar to South Florida, South Texas is seeing some tightening week over week. Again, flashing some signs of produce season starting up. Now, freight going out of the South is going to become very favorable for carriers as produce season starts to heat up. And as we stated before, shippers need to have a plan for produce season throughout the year.
And produce season could last a lot longer this year than it has in the past, but it seems like shippers are really holding the lead in terms of market shifts. Is that right, Maze?
The market is still moving in favor of shippers, but it's starting to show some signs of slowing down. Nonetheless, carriers are still going to continue to be navigating in some tough waters in the months to come. Now, one forward-looking indicator is certainly imports, and there's been a lot of noise around imports. Just looking at the spot price to move containers from China to the West Coast or East Coast, since the beginning of the year, we've seen these rates drop more than 20%, showing how soft not only the truckload market is, but also the maritime market. Now, looking at imports by volume, we're continuing to see very depressed volumes. Now, I don't want to get anyone excited, but looking at inbound ocean bookings, it looks like we're going to start seeing a slight uptick and the amount of volume coming to the US, but nothing to change the truckload market significantly. Instead, shippers and carriers really need to play on produce season, in my opinion. Again, I don't want to be scaring people thinking that produce season is going to bring a ton of volatility, because it's not. The market is just too soft to see a significant amount of volatility, but it will provide some pockets of relief for carriers if they stay up to date with what's going on. At the same time, it'll be the first time that shippers may see pockets of difficulty in their network, other than the beginning of the year with the snowstorms.
That's right. And we actually heard recently from one of our top shippers that they are starting to normalize out in terms of now the operational efficiencies that they had experienced prior to 2020's pandemic is now something that they're facing again. So there's a lot more to look out for in the coming weeks, Maze.
Well, Jenny, as always, it was great talking to you. I look forward to navigating through March and seeing what the markets have to bring to us.
Same here as always, Maze. We'll see you next week with an all-new episode of the Transfix Take Podcast. Until then, drive safely. All views and opinions expressed in this podcast are those of the speakers and do not necessarily reflect the views or positions of Transfix Inc. or any parent companies or affiliates or the companies with which the participants are affiliated and may have been previously disseminated by them. The views and opinions expressed in this podcast are based upon information considered reliable, but neither Transfix Inc. nor its affiliates nor the companies with which the participants are affiliated warrant its completeness or accuracy, and it should not be relied upon as such. All views and opinions are subject to change.